Good morning. It's Harvey Jackson from Producer Profit. Just going to go through a couple of news items that actually caught my eye, and I have clients asking me about diesel fuel prices as well. Now, we'll just get into it here. The This article quoted by Reuters is talking about global diesel prices maybe on the rise because of refinery space going down. But I also will probably take note that there's refinery space increasing on the renewable side. So here we are, some of these plants getting shuttered in different parts of the world, uh, uh, just because they're maybe old or outdated. And yeah, well, I just put it as a caution. I do not know if this is actually going to be something that got posted to try to drive the prices of diesel fuel up, or a reason to because there's actually increased capacity with renewable fuels, which is refinery space as well. So that fuel is getting added to the market while this is maybe getting removed on shuttering some of these older plants. Palm oil back above the 5,000 ringgit. I'll maybe show you what that in a chart later. This article is kind of talking about the soybean ban from deforested Amazon rainforest, and this is along with the European kind of deforestation rule that they've extended it for this coming year. But it still puts a lot of worry in Brazil, because they're basically pushing down rainforest to grow soybeans, and some of those soybeans make its way to Europe, and Brazil definitely wants to keep that access, even though it's minor compared to the Chinese, but they still want to keep that open. So I'm just going to quickly go through some of these, some of these currency pairings. Japan, USDA pairing. India is keeps on weakening. Swiss franc weakens to the euro. And here's one that I just want to maybe take note of. You can see that the interest rates have kind of, and the inflation and the interest rates have kind of pushed the inflation down. So another thing here is just saying much the same thing in India now too. So let's just have a quick look at the markets here. We're about 370 to 350 up on canola. Rapeseed is up 425, and on the front month even stronger at $10. Soybean oil just basically flat, but a little bit green at 42 cents, 42 and a half cents a pound. Here we are, the palm oil is up above the 5,000 ringgit. And again, I quote 2 months ahead, so you just have to keep that in mind. Crude oil right around the $70 a barrel, and soybeans basically trading flat, and your wheats are basically trading flat as well, with the Canadian dollar still having issues at the bottom as well. So here we are with canola priced in Canadian dollars, and I'll show you just after this slide. We're running into basically, it looks like we're kind of tailing off here, running into some sort of resistance on the up and the down on Fibonacci retracements here. Uh, it's maybe just a little bit of a slowdown. And here, what I'm showing here is your just the rate of move right from the low that we made back in September uh, of the Canadian canola has gone up by 8.9% about, where canola priced in US dollars only went up 4.6%. And that's a lot of that difference is you can see the gap is widened just because of the US Canadian dollar pairing has widened out that differential. Canola for next November is actually made it above the 38.2 retracement value. Still looking to get up into this kind of area up here. So, 640 to 660 kind of range for new crop sales. We're not there yet. Rapeseed itself getting a lot closer to the 100% retracement here, right back to some of the highs that were made back in November. And we're still tracking there, looking pretty good. And this is my differential of canola to rapeseed. It's back up again, $184 differential. So rapeseed is $184 priced in Canadian dollars, more expensive than Canadian canola. So when you look at the oil, it's basically just dragging sideways here. Got a little bit of support from some longer term moving averages, but would love to see this get back up into this area here, and that would support this canola. So if there's an oil complex that I say we're getting anchored, and it's this one right here is actually anchoring the canola down, because it's in domestic, or I'm going to say North America ridden, and a lot of the oil gets sold to the Americans, and that's the problem that we're running into. If we can get a little bit more export demand, we would definitely be riding the inversion that we see in palm oil and the European rapeseed. So here's your palm oil right at the 5,000 ringgit again. I put that line in there as just a value that seems to on both sides of this, it actually it seems to be limiting the amount of sales that they have, but they have product, and this little bit of pullback actually added some more sales, and now we're back in the green again today. Chinese rapeseed, you see this little bit of a move up and down, pretty good green candlestick there. That's actually showing a pretty good update there. Crude oil made it above this wedge that I drew in. Now we'll see if it keeps on trading out of there, but it's got lots of resistance at these peaks up here. Just shy of the 72 to kind of put a cap on it. Now that definitely can happen if things continue. So here we are, this crude or your basically your diesel fuel in New York for heating oil. It's actually on a little bit of an increase, but demand at this time of year definitely shows up for the heating oil. But we see that it's still in a lower end of the range. And here's your soybeans, just showing a little bit more time, but it's trading right at the $10 mark for the March contract. It's looking for some guidance, and I think it's looking for guidance from the corn. Soybean meal, I just showed even a wider or longer time horizon here, and you have to go all the way back into 20s before you see this kind of a price that you have on the meal. So this should actually help some of the meat industries that need a lot of meal for sure. Canadian dollar. I was talking to a client yesterday, and we did overlaid canola and overlaid gold over this, and this is a worrisome time for us to be at. If we break through these below the 68 kind of cents to US dollar pairing, the low over here we got to 61. So trust me, that it feels like it's supporting canola, but when you drew the canola chart over top of it, it did not look very good. And maybe I'll do that some other time here. Spring wheat, it needs to get above this, and it's trading right at it right now. So there's the sideways move, of course, which is good, but at the same time, to get any lift here, we're going to have to get through some of these longer peaks that we've seen here. That's not very far above this market, but you traded a lot of times at those values, and it's going to be a little tougher resistance to get through. Next year's target levels still leave it at the futures first around $7 is probably my target. So we've got about 50 cents to go on the December 25 contract to get to. But leave those targets in there for those futures first contracts in there. Here's your Chicago wheat, and here's your hard red winter. Similar to the red spring, it's got to get above that previous highs that we made in November before I can even say that I'm really strongly bullish here. Milling wheat actually is getting a lot closer to those November highs, but need to continue to trade through those ones. And the milling wheat could be supportive for us. So here's the corn, and the corn made it through my wedge, but it's kind of getting stopped out at the September high that we made, or the beginning of October high, and just keeps on bouncing back. And then there's the 200-day moving average here as well that it bounced off of as well. Live cattle, look at that. Cheap protein sources can actually help support that as well, right? US dollar index, we do go high or above it occasionally, but I don't expect it to stay there. The US dollar, or US is actually the main currency in the world, and if everything else is following against it, it's going to lose some favor there. And I think that's all I have for you today.